Thank you, Brian. It is a pleasure to be here. I'm just going to make sure this works. Okay. And Brian and Joanne, thank you very much for having me again. I noticed half the staff at AmCham had their arms in their sling. So I'll be quick and brief, and then we can delve deeper into some of the other panelists. Let me make sure this is working here. I do have some slides to talk about, and I always kind of start with the big picture with our clients because, you know, as Richie was saying and Brian was saying, and you all know, it's still difficult out there. It's been a while since the Lehman Brothers collapse, 4 years hence. But you still see the global economy kind of churning ahead. And I'm not bearish, but I'm cautious about what's happening in the EU. I think the US is getting better. But nevertheless, you see this hook up in 2013 and 14. I hope the IMF is right. We might be flat-lined a little bit here, but you can see where we've been. I mean, we've had a once-in-a-moment lifetime when it came to the Great Recession, and we're working our way through. And I'm encouraged. I'm encouraged what's happening with U.S. corporations, what's happening with the EU. I'll be honest with you, we're not talking about this enough, but I'm not encouraged what's going on in China. I am worried about the emerging markets in terms of resetting and getting off that export-led growth. But here, when you see these kind of numbers, U.S. corporations, Irish corporations, they have to get up every day and do something. I go down to Washington a lot. I don't see a lot going on. Corporations are different animals, right? I mean, some presidential contender, Mitt Romney, thinks they're people. You know, maybe not, but I do know that every day they have to get up and deal with the ecosystem that they're in. And so you've seen U.S. companies, when it comes to their outflows, kind of a little stagnant here in 2012. Not surprising. It's cyclically weak, but structurally, U.S. companies are out every day scouring the world for opportunities. It never ends. They never sleep. They never will. And Ireland is front and center when it comes to being a place to do business, not only because indigenously what's happening here in Ireland with the adjustment, but also you're part of that big EU market and beyond. And I'll talk a little bit about that in a moment. Major destinations, I mean, it is phenomenal. I have my, you know, I've got to kind of mentor many of my students, my staff, even my colleagues on Wall Street. Now, Wall Street, they think they're the smartest guys in the room, but we all know that's kind of a myth because they prove it year after year when they blow up certain trades and so forth. But the smartest guys in the room are always amazed where Ireland ranks when it comes to where U.S. companies put money to work, and it's always China. But look at China's, you know, what their take of U.S. FDI inflows versus Ireland. Very impressive, and it kind of speaks to the fact that when it comes to doing business, maybe a lot of people in the U.S. don't understand how we do business. We do business on the ground. We leverage overseas resources, and this is nothing new. There is a backlash, so to speak, building in U.S. about outsourcing. You know, these villainous companies sending jobs overseas at the expense of U.S. workers and income. A, it's not true, and B, we've been outsourcing U.S. companies for over 100 years with Ireland front and center of that process. But these are pretty impressive numbers in the sense not only for Ireland, but note that when it comes to the developed versus developing economies, U.S. companies like to go where there's wealth, where there's skilled labor, where there's a rule of law, where there's transparency, where they know if they put something in, they can get it out. And this is a big issue for Brazil and China here. And speaking of the BRICS, Ireland versus the BRICS, this is another chart that surprises people, right? Because the narrative, the common narrative, the consensus in the United States is we're all decamping U.S. companies for the lower, cheaper locales of whether it's Brazil, whether it's Poland, South Africa, China, of course, India, and really it's not. And I would raise the issue here, Brazil's in recession right now. India's struggling to kind of right its course. China has significant challenges in front of it in terms of transparency, competition, stronger currency, rising wages, social instability, worker union militancy. There's a lot going on the ground in China. And you can have a big market, but that's one thing. You know, ease of doing business is another. And if you look in the report, when it comes to Ireland's competitiveness and ease of doing business, this economy rates very highly. In addition to being attached to a big European market. So there's a lot at stake beyond kind of the common narrative. And these numbers just speak volumes about where U.S. companies are putting their money. And it surprises people still. And I've been on this narrative, I think now, for over a decade talking about the transatlantic economy. I have to tell you, I'll be honest with you, the message is starting to seep in over in the United States. We're a little thick, we're a little dense. We read the headline, we don't go beneath it, so to speak, but I can tell you that we're making some headway understanding the transatlantic economy. And I guess we only recognize the EU when it's bad, right? I mean, when the things are good, it's like, okay, yeah, they're always there, so what? But in 2011, we had a painful lesson because when you had the crisis, the sovereign debt crisis really morphed into something much more than people expected. And when U.S. companies, many of you here in this room, started reporting to Wall Street like, we missed earnings, or the guidance isn't all that good because of Europe, they said like, what? Why Europe? I thought it was all about China and India. So we've learned a painful lesson, hopefully it'll stick with us, that the EU matters. What happens on the transatlantic side of the pond is very important. And if you look at the foreign direct investment flows, if you look at foreign affiliate income, which is a proxy for global earnings for U.S. companies, it's still Europe that matters. It's still unequivocally, and you're front and center right in this process. This is the U.S. FDI stock in Ireland, nice upward trend, the last 10, 20 years. I think this is going to continue as long as you here in Ireland continue to kind of push forward when it comes to creating the human capital, the infrastructure, the tax codes, everything. It's a bundle. I had a radio interview this morning, and kind of the first pointed question, one of the first pointed questions was, well, it's all about the corporate taxes. Corporate taxes matter, unequivocally, but U.S. companies are looking for a bundle of attributes by which to invest in. And I think Ireland is front and center there, and you can see the steady upward momentum. And keep in mind, U.S. companies, much more discerning now. They're really rethinking what they're doing when it comes to where they produce and why. And Ireland's done a fabulous job staying right on their radar screen. Because I'll tell you a little story that's not being told just yet. U.S. companies are looking at a new dynamic economy by which to invest in. And believe it or not, it's the United States itself. The U.S. is becoming a low-cost, when it comes to wages, low-cost energy producing powerhouse. And you're seeing a lot of investments stay home, which I think is an interesting dynamic. When it comes to affiliate sales here in Ireland versus trade, it's night and day. Exports say one thing. What we sell here and for the export markets are another. Manufacturing employment, just kind of show of hands, this is going to kind of trend upwards. I'm just kind of curious, are you experiencing more employment, whether services and manufacturing? I'm just curious of U.S. companies. I mean, I'm hearing from many of you that yes, slowly but surely, we're going to increase our employment levels here in Ireland. And there's a give and take, right? I mean, I know there's companies pushing overseas into some of those, say Poland, for instance. I was in Poland, they're very optimistic about the foreign direct investment flows. But what I think what people miss is like if a U.S. company pulls back in Ireland, it's typically not that they're leaving, but they're readjusting in the sense they're pushing the lower value activities offshore or to other parts of Europe and increasing the value added nature activities here in Ireland. And that's exactly what you want to have happen. That deepens the relationship. The headline can say so-and-so's leaving, cutting jobs without realizing that the existing jobs, the new jobs, will be at a higher value-added level. And that in of itself pulls Ireland deeper and deeper into the global orbit and networks of U.S. companies. It's a positive, not a negative. And I think that's misunderstood in many cases by the common narrative. So manufacturing employment, here's the U.S. affiliate income in Ireland. This is a profit base. No doubt about it, and it's not just all about corporate taxes. I mean, this is a place where U.S. companies do business, they sell locally, they export to that big European Union market. Only Switzerland is a larger export platform from U.S. companies than Ireland in the world, bar none, including China. And I've got a table in there in the report. It's stunning how much Ireland has positioned itself to be an export platform to the big EU market for U.S. companies. When you talk about China, or you talk about, say, Singapore is important, even Mexico for that matter, because of NAFTA. But what U.S. affiliates export from this base is pretty impressive, not just in of itself related to the EU, but globally onto itself. So this is a very powerful trend, and it kind of translates into our affiliate income here in Ireland for U.S. companies. Flipping the switch a little bit, the United States, we have to continue to attract foreign direct investment. And we are seeing more investment from China, Poland. I thought it was very interesting. I kind of had to think about it, but we just got a new announcement. An Egyptian fertilizer company is going to open a plant in Iowa. Now, I kind of thought about that, and I said, like, wow, if this gets by the government, it'll be interesting. You kind of put that all together there. I'm not insinuating anything. But you know, every day you're seeing the developing countries come to our markets. Lenovo, the big Chinese company, is going to open, computer company is going to open a plant in North Carolina. But your companies are in there as well. We're a big, large, open, wealthy market, good rule of law, transparency. And I think it's encouraging because this is a two-way street, as the film talked about. That makes for the most dynamic component. That's not true of U.S.-China relationships, for instance. It's imbalanced. There's not a balance. They trade too much with us. We invest too much in them. But here, you're seeing very clearly the U.S.-Irish linkages strengthen bilaterally. This is not lopsided, and I think this is an important point to kind of drill home. We need Irish companies in the United States creating jobs, helping communities, putting incomes in the pockets of U.S. workers. It's a win-win situation. Related to that, you know, we've seen a slowdown, you know, 2008 to up till now, it's very choppy, a lot of cross currents. This isn't surprising. The biggest issue in the United States, really, and you see it in the macro numbers, it's just a lot of from the banking sector. European banks, obviously, under a lot of stress, here in Ireland included. They're selling off assets back in the States to raise capital here back home. And that affects the flows. You're seeing that clearly. Non-financial banks, however, non-financials in particular, you're seeing a steady stream increase in the year-over-year numbers. Why is this in particular? Remember, the United States, we're growing, not by much. It's only about 2%. But a 2% growth, real growth on a $15 trillion economy is a lot of incremental output. So believe it or not, the U.S., I think, is becoming increasingly one of the most attractive places in the world to do business. Now, we'll see what happens after the election. We've got to deal with a fiscal cliff. We've got our own problems to deal with. But I am encouraged that the Irish companies recognize the fact that this is America is a place by which you want to do business and compete and drive earnings and drive trade. So this is, I think, my second to my last slide here, just Ireland-U.S. global linkages. As I said, this is a two-way street when it comes to the level of investment, total assets, foreign affiliate sales, value-add of affiliates, affiliate employees, and so forth. Note that, you know, Ireland employs more folks in the United States based on our estimates. That number, I think, will come down a little bit here as we adjust to some of the banking numbers. Here in Ireland, you know, over 100,000 workers, value-added, mix of manufacturing and services going to continue to grow. And as I said at the outset or in the middle, I mean, I think people don't realize that when companies are cutting employment in one area, increasing in another, that's just the nature of business. And I'm preaching to the choir here because you drive operations, you run operations. But I just think the common narrative in the media and on the main street, so to speak, is like any cut is a negative without realizing that in many cases, Ireland is being upgraded in the global network of U.S. corporations in their global orbit. That's a good thing. That's a positive thing. So if you got to give a little at the lower end to increase at the upper end, that makes for a stronger relationship and more of a longer-term partnership. It only gets stronger, not weaker, deeper, not less in that sense. The last comment I would bring is it kind of surprised me when it came. Well, this is foreign direct investment stock in the U.S. I think that's kind of that is not U.S. stock. Let me just talk about this. This is the percentage. I want to make sure I've got the right chart here. Yeah. Okay. How do I go back? The biggest issue I saw in Ireland numbers, when you look at, you're a big exporting platform for U.S. companies, but Ireland does not trade enough with the developing countries, developing Europe, a WTO member now called Russia, the Middle East, Africa. This is a huge opportunity. So I'd like to see Ireland kind of expand its trade and therefore investment flows with the developing countries beyond even the near Europe, so to speak, and help drive that process. I think that's what U.S. companies are looking for as well, because your trade is overwhelmingly balanced or biased towards the developed markets, developed Europe in particular, which surprised me, because I'm particularly bullish about Europe when I speak to U.S. companies, U.S. investors, is that, yes, there's the European Union, but when you look beyond the European Union, There's that periphery that starts in Russia, goes down through Central Europe, into the Middle East, North Africa, even Southern Africa. I'm excited about that part of the world. And there's a lot of ferment, there's a lot of instability now, there's a lot of problems in the media. Excuse me. But when I think about your periphery, you know, the EU periphery, that's a mini China unto itself. There's a lot going on there that just doesn't get the right attention. And now with Russia into the WTO, I think that's a new added element by which Ireland should start thinking about tapping in and driving with the help of U.S. multinationals. It's the next phase of this relationship. So I'll wrap up, Brian, standing to say, to me, there's some cyclical weakness here, but this relationship is very strong fundamentally, and I applaud you in making that happen. And all U.S. companies, you've made the right choice being here in Ireland, which is one reason amongst many that you're the most globally competitive, best on planet Earth. So thank you.